Okay, it's 24th of January. Rudy here on a Saturday afternoon. Just listened to a video from that CME group, that Jeffrey Christensen. You may watch him. He's a riveting fellow. But I like to listen to what he says because he's a anti-conspiracy theorist on silver. Because I know there's a lot of them out there. You know them if you follow silver. But he said a couple of things today, which he said the Chinese premium is due to the VAT. And I'm just going to, in this video, cover. I think he's full of S there. And he also mentioned, someone asked him a question about, JP Morgan got fined. There had been, playing the market, and he says no. It wasn't JP Morgan. It was their traders. Okay. All right. Well, that's not the point. The point is this VAT thing and the Chinese premium. Why does it exist? Okay. So before we get into that, just an update on the open interest. So I'm keeping a tally now. So this is the latest that they have, is at the 22nd. So open interest. So just to show you the proof. So this is from them. So this is the number of open contracts on the Comex futures market. Okay, well, what does that mean? Ready? Okay, so each contract is 5,000 ounces. Okay, so 155,000 contract times 5. So there's 770 million ounces of paper claims out there. And then, okay, so how much is backing it up? So, again, this is from the CME group. The latest activity date was the 22nd. So in the Comex vaults, there's 114 million ounces in the registered. So there's two categories. Registered is what's available to back up the futures market. The eligible is 300 million. Because they'll often start, there's 400 million ounces in Comex. Yeah, but 300 million that is already... it's like high net worth people, ETFs. It's like in their vaults, but it's not for backing up paper claims. So the magic number is this 114 million. Okay, so there's 114 million of physical. So 17th of January, the ratio was 6. So slowly the open interest is getting bigger, and the physical's getting smaller. But that's also too, you hear claims of 800 to 1 and whatever, blah blah to 1. So this is the true paper claims in the Comex. Okay, so that's still bullish. Alright, well, before we go on, we have to look at, daily candle, big daily candle through 100. Where's Mr. Slammy gone? I don't know if you people, Jesus, we were sweating around here. Oh, they're going to slam it down, then look at that. You can see in the last, and this is interesting, so in the last 3 hours, it took off. Okay, so that's US silver. All right, so China. That's what I need to show you. The time. Hold on, let me just go back here. So this is the Chinese Shanghai Futures Exchange, and if you look down the bottom, so it says 1800. So that's when the Shanghai closed. So 1800, look down the bottom. So 1800 is this bar here. So as soon as Shanghai closed, it ripped, and that'll be important when it comes a bit later. Okay, I'll come back to here. A few things need to go over to support the thesis. Okay, so over in China, so there's things called standard lots. Like when you buy a futures contract, you're buying like something physical in a standard approach. It's just not 1 ounce, 2 ounce, 10 ounce. So over in China, on their futures market, they deal in predominantly 15 kilo ingots, and those ingots need to be refined in China. Okay, so whereas in America on the Comex, the standard is 1,000 ounce bars, which are 31 kilos. Okay, and you notice the big difference here is they've got to come from a refinery in China and be in ingot form, and in America they're in bar form. So if you're going to take your American silver, because we know there's a premium, take my American silver and go sell it in China and clip the premium. Well, you've got to send your bar to China to one of their refiners, and then get them to refine it back into appropriate size ingots, and then you've got to ship it there. So it's not as easy as buy in America, send it to there, and sell it. But this will all make sense as it all. But so that's an important distinction between the two markets. Okay, so what we're looking at here is the Chinese price converted into US dollars. So it's 108 US and 103 in America, and that premium. Well, this is where the magic begins. So we know, the last month you've been hearing $10. So this is the difference between the Chinese price minus the American silver price. So you can see it's been around $8 to $10 for those who follow it. You would have heard about all that stuff. But you can see this red bar. I can't go to hourly charts on this, but that was due to that last minute spike in America in the last 3 hours, where America shot up, and so this would have finished up around here if China was still open. But the point is, so there has been a premium. All right, I know I'm building. Okay, so CME say the Chinese price is higher because you've got to pay a VAT. Yeah, well, think about that, right? So whatever you buy on China, so you buy in China for 108, well, you then got to pay another 13% tax on that. Okay, can you see where we're going here? So it should be the other way. Chinese price should be the American minus the VAT. Yeah, so you buy in America, add 13%, then that's the same as China. Does that make sense? It should make sense. Because get rid of the, you got to refine it and shipping costs. The American price should be 30. If you want to buy in America and send to China, then you want the American price to be 13% cheaper. But there's a premium, and we can see historically, it's it's been $1 or $2, which that's just what you'd expect. But lately, that premium's been higher. So in effect, not only are they paying a premium, let's call it, I don't know, $6, an average of $6 to $8 premium over the US, they then add another 13% VAT onto that. So CME's point of saying this premium is due to the VAT doesn't make sense, because this is pre-VAT premium over America. Okay, so the point of it is this premium is due to tightness in China. They want their silver, because these industrials, they buy these ingots and then refine them down to use them in applications. And yes, there's the potential for copper to replace silver if it gets too expensive. But then you've got the copper price increasing too, and you've got to change the way you make things. You've got to change your mix. So just wanted to I don't mind him, old Jeffrey. If you don't, you'll understand if you've watched him before. And he is bullish silver. He just, I don't know. He hates conspiracy theorists. All right, so the premium's not due to the VAT. There should be a discount, if anything, due to the VAT. So while we're here, we may as well have a look at, so SILJ. Interesting, it's made its measured move. That doesn't mean it's the top. I don't think so. Well, again, if we look at the the hourly chart, so I expected a bit more from SILJ with silver breaking 100, but it just basically sat there all night. But I think usually Monday opens up strong in Asia. So we just look at the big boys in there. So Heckler, Kua, First Majestic, and Endeavour. They're the big players in there. Then these are silver producers, but they're not in SILJ. They should be. ASM, Vizsla, there's a big developer. UP, USAS. All right. I hope that clarifies, makes sense. Yeah, there's a lot of stories out there, but still looks good for Miss Silver. Let us know your thoughts. If you enjoyed that, give us, me and the Rooster, a like, please. Thank you.